Welcome back to the Super Trade. So I know you all must be panicking because the market seems to be in a free fall, but still the market has not fallen much if you look at the historical data. This is not a time to panic. This is a time to invest in very good blue chip stocks which are available at a highly discounted price. So let's look at the historical data because history repeats itself. And remember one thing, the stock market represents businesses who are generating profit, who are selling goods and services to the people. So if the businesses do not survive, the country cannot survive. And businesses will make profit, blue chip companies will make profit eventually. And in fact, their profitability has not fallen much. So there is nothing to panic because this is the time, it's an opportunity to invest in very, very good stocks with solid fundamentals. So let's take a look here. And before we go any further, please do subscribe to the channel and like the video. Today I'll also be uploading a video with regard to a very wonderful stock with deep analysis that I've done, and it can give you a very good return in the long run. So let's begin. So this is a Nifty chart. All right, I'm starting from around 22 years back. So you can see the time here. It's the date here. It is uh, February 2000. You see, let's figure out by how much the Nifty has fallen. All right, before it gave a bounce up. From here up till this point, Nifty has fallen by around 50 to 53%. Then it gave a ride up. All right, I'll come to my point in a while. So that's one situation in history, and you see how big rise has happened. Another big fall happened in 2008, that is the subprime crisis, and let's figure out how much Nifty had fallen during that. And it seemed to be at the end of the world, end of US market. Everywhere there was panic, but we knew what happened later on. See, it has fallen by around 60%. If you see the red one here, it'll give you the data. It has fallen by 60%, around 60% before again it jump up. Let's look at some other big fall. Then the COVID crisis. You see, from 17th of January 2020, the fall started. It bounced up a little bit, but the fall continued. And you see by how much it has fallen, and so rapidly in such a small period of time. Around 40% it fell down and it went up later. Now let's look at the current scenario. This is the high point of Nifty. So from this point, by how much Nifty has fallen till today? You see, it has fallen by around 18, or you can say 18.5%. So there is nothing to worry because it seems to be that the market has fallen too much, but the market has not fallen because in the previous historical data I've shared with you, just shown uh, that Nifty had corrected 40%, sometimes 60% before it bounced up again. So I'm not saying that Nifty will correct itself from here and it will it will further correct or it will go up. Nobody can speculate that. It may fall further to this point, that is 14,300 level. It may fall down to this point, very unlikely, because this is a very important point here. It can fall down to, or it can fall down to the previous high before the COVID crisis that has happened, that is 12,400 to 12,500. That is very, very unlikely. But Nifty has fallen by only, as I've told you, around 18% from its high. So there is nothing to panic. This is the time to invest in good stock. You cannot predict when the market is going to go up. You cannot speculate on that. Nobody can speculate on that. There is hyperinflationary situation going on in US, and we all know that entire stock market, I mean around the world, they take its cue from the US market. So Dow has fallen, S&P has fallen, mid cap index has fallen. But the thing is, again, there is a further fall, I mean, scope to fall for Nifty to 14,300 level also. It may rise up. We are not there to predict that. We are there to invest. So in a staggered manner, you can, start buying into very good stock. Don't buy all at once because the market may fall or may rise. Then you'll say, sir, that why don't we, just buy all at once right now? Because what will happen in that case, if the market falls, you don't have enough money to average good stock at a heavy discounted price, then you will panic even more. So buy in a staggered way. Say for example, you have allocated 20,000 rupees for stock. So buy in a five, you know, 25% in once, short. Then again, if it falls down by further 5% that particular stock, then again buy for 20% of your capital or 25% of your capital. Then in this way, what happens? You're getting a better average and also you're not losing the chance when the market bounces up because you're already in the game. So please do not panic. There are very, very good stocks that you can invest into. One of those stocks I'll be discussing with a deep analysis today in one of the videos that I'll upload. So please remain in the game. Remember one thing, the FIIs, the DIIs, they are sitting at the bottom to grab good quality stocks. And when that starts to happen, the market will gain momentum, upside momentum, and the bulls will eventually, in the long run, bulls rule the market. You can see after every fall, the bear has been given a run for that money, for their money. So the bear market doesn't remain for long. Bull market in the long run will always be, businesses will grow, they will generate profit, people will consume more, there will be growth in every economy of the world. So be positive, be optimistic, and avoid any kind of penny stocks right now. Please do like the video and subscribe to the channel. Thank you.